We'll keep an eye on that as we get ready here for the opening bell. Final one of the week. Get your look at the bell and the CNBC real-time exchange and the big board today. It is Liberty Energy celebrating its ESG report at the NASDAQ. SPAC GSR2 Meteora acquisition corp. As we watch Brett fill in. By the way, watching the VIX today as well, which has averaged about 21 in the month of August. That's about the lowest since November.
Yeah, as a monthly average, 20 is kind of the very long-term average, but with massive variation around it. It's hard to say that it's telling us something concerning necessarily beyond what we've already seen, the daily market movements. What does it take for the VIX to really go higher from here? It takes people being very concerned about the next 30 days of the S&P 500, what it's going to do, and to pay up for the protection against it. And that just hasn't really been a great bargain for people, at least psychologically for people. So it's sitting where it is. It reflects a more stable market, well up off the lows, and this general sense out there that it would take another macro shock probably to knock it back. So whether that means, oil rebuilding some of its losses, or something out of Jackson Hole. Right now, I don't look at the VIX and say it somehow has it wrong, because it basically has been this relatively slow and managed bleed lower since those highs in June.
Right. As for the discussion about earlier in the week about the 200-day moving average and retracing 50%, does all of that sort of lead to one note for you, the idea that we got to a level where you expect things to get tested?
Yeah, I mean, yes, in terms of this pullback here,
yeah.
It's completely intuitive. It makes sense. As Jeremy was saying, got overbought in the short term. What I find a more interesting question is the historical, overwhelming evidence that when you get more than half of a rally back, it means that the bear market's low is in, and this is it. I don't want to push against the idea that would be the case. I think the benefit of the doubt is now with people who say that the low is in and we'll work it out from here however we do. But there's been so much that's unorthodox about this particular cycle, right? The market peaked before the Fed raised rates for the first time. Remember at the beginning of the year, everyone was like, when the Fed starts to tighten, the market does great for the first 6 months. And it just has not been in sync. And on the way up in 2020, the number of times we said, this is the fastest, this is the biggest, this is the most in terms of the speed of a recovery we ever had. So I don't want to say that the rules are different now, but I feel I understand why people who say, well, we got back 52% of the total losses, and that means you can safely, count on upside from here. I understand why there's a healthy debate around that.